Today is Sunday, August 22nd, 2010. I'm looking at a chart here of the S&P 500 Cash Index. This is a daily chart, so each bar is 1 day. So we're actually going to be looking over what happened last week and trying to get an idea of what to expect coming into this week. And as you can see here, we had a little bit more action set up in this area right here, but not too much in terms of defining which way the market wants to go. We did have this previous trend line or this channel right here, and price did manage to bounce around quite a bit with these long wicks on the bottom side. And one thing we noticed last week was that we did have a break of this level and a significant close below, and we were down here. So we talked about getting short, but again we needed to wait for some sort of good level to get short at, and one was this one right here, the other one being right here. So price actually managed to pierce through this resistance, get up into this level before the bears actually came and pushed it right back down. So again, people who are short from here probably targeting this level of support right here. Right, so again, we are in some sort of a no man's land, and it's a higher risk trying to get in on an entry right here. So to see what actually price is doing, it's probably beneficial to go to a lower time frame and see how price action is setting up over there. So looking at the 60-minute chart, you can see our price is kind of just stair-stepping down. We're making lower swing lows and lower swing highs, which indicates that we're in some sort of a bearish trend in the near term. One thing we can do off this price action is take a trend line from the highest point and take another swing high and see where we can expect sellers again if price does manage to push up. But as you can see in the near term, we've been using these levels as resistance. As you can see here, the bulls rather losing the upper hand here, indicating a potential turnaround. But like we mentioned earlier, on the larger time frame, we are in between these significant levels of resistance and support down below. So it'd be wise to wait for price to actually move up into one of these levels before taking some sort of a position. All right. So looking at going back to the daily chart, looking at how price has been setting up, I would expect that we do continue to move down. The only problem is that this bar right here tells a different tale. As you can see, we actually managed to push below this swing point right here on Friday, and then before the end of the day, the bulls came right back up and closed price within this range. So this tells us that the bears weren't as strong as we first expected. But again, the important thing to notice here is we do have a lower low. a lower high and a lower low on the candle itself compared to the previous candle. And also note there's no upper wick. So that shows that right at the open, the bears pushed it down right away. So we'll have to see how this sets up. If we do see a higher high here, there's a good indication coming to resistance points, but there's plenty of supply overhead to push this thing back down. So personally, it's my opinion that we do see this level at some point where shorts will be taking profit, and we could see some potential buyers come in at that point and take this thing back up. So until then, I'll be sitting on my hands, I guess, and if we do see price move into one of these significant levels on a daily chart, I'll be looking to take a position. So that's pretty much it for next week. Good luck trading, and thanks for watching. mugtrading.tk.